What's your expectation? Is it the sub 4 or is it the above 5?
So I would put the point in two different dimensions. The most important thing to keep in mind is that the Fed dot plot, which everybody refers to, is only a signaling tool. It's not a forecast. So the dot plot is always wrong, and for right reasons, because it's not supposed to be correct. It's supposed to lead the market to react in a particular fashion. Interestingly, even the market is always wrong in terms of what the Fed should do. And we have more than, 75 dot points available to us, data points available to us since 1958 to prove that point. So the more important thing...
The market was not wrong, Sanjay, when the hikes were coming. The market got it damn right when the hikes were coming. Okay,
so the question is this, what is the market predicting in terms of the path forward? Let's go back in for example, in Q4 of 2023. Remember, the market is talking about 5 rate cuts. It hit almost 7 rate cuts at the peak. Today, the market is talking about less than 3 rate cuts.
So on the rate cuts, I agree. There's been some mispricing, right? There's been some recalibration, and a lot of that has to do with your own expectation of how inflation will pan out.
So but
to your point, that the market has always been wrong. I'm saying that the market has gotten it right in the past in terms of rate hikes.
So market is always wrong in predicting the path. Right. In terms of market, what you're talking about getting the right price, it's a accumulation of two things. Number one is, as I mentioned to you, no central bank in the world can control the market. What they can is signal the market. And for that matter, Fed has a fantastic track record, especially the current chair, in terms of guiding the market on the right path. So they, for example, if you notice in all the rate hikes you're referring to, typically the market has got almost 95% probability of rate hike before the rate hike actually happened. But the important portion is from the investor point of view in terms of what's going to happen. Just to remind you, again in Q4, we are talking about almost 100% certainty of rate cut in March 2024, right? Which we referred to back. So the key takeaway from the investor point of view is that forecasting is nobody's game. There's no point in doing that. From the investor point of view, given that today we're talking about yields to be one of the highest in the last 15 years, it makes sense to grab the yields. Right? And if like people like in Silverdale, if you can leverage it, all the better.